We have seen, of course, this dichotomy between value stocks and growth stocks. But at the same time, this chart on the Bloomberg showing us that EM value hasn't really done that much better than EM growth. So can we really count on these valuation plays, especially when the dollar is so strong and we know what that does to markets across Asia?
Sure, I think that EM value versus growth, I think a lot of it also dependent on investor risk appetite for emerging markets. And given the rise of yields in the US, that could potentially delay some of this rotation over to emerging markets. But I particularly like Southeast Asia stocks because of higher growth rates for this year, and also, as you mentioned, cheaper valuation. And I think that this could potentially just be a second half story as their economies start to rebound, and most Southeast Asian countries are already reopened.
And Southeast Asian countries also very much dependent on what happens with the Chinese economy. Where do you see the economy and markets going in China, and how will that reverberate throughout the region?
Sure, I think that all eyes are very much on whether China is going to pivot or transition its pandemic policy. I don't think that they will. I think that they'll continue to stick to a zero COVID policy, at least well into the party Congress later in the fall of this year. And that does have very much significant implications on supply chains in China, and also on the Chinese tourism dollar and whether that flows to Southeast Asia this year or not.
It could potentially impact, as you say, some of the supply chain issues on top of the existing inflationary concerns. So where do you look in terms of the positive exposure to China and not the negative?
Well, I think that that's a good question, since I think Chinese equities have very much taken the hit due to a lot of the macro variables that are impacting China. And I think that Chinese equities are starting to look more attractive, especially at these current valuations. We were a big fan last year of Chinese CGBs, given the yield differential between CGBs and the US 10-year, but that yield differential has collapsed. So I think that that trade and investment is no longer as attractive. But I think that looking at Chinese equities longer term, that this potentially could be a buying opportunity.
How problematic is a continuation of this dash for King Dollar?
Well, I think that right now what we're really seeing is investors trying to grapple at which asset looks lucrative and attractive, given so many of the macro headwinds that are going on right now. And I think that the US dollar continues to be a safe haven asset, given some of the geopolitical uncertainties and also some of the growth challenges that we're seeing. But I think that the dollar strength has actually been quite a long play already. And I think that investors are starting to pivot to see what other assets are attractive.